Hey everybody, Eric here. Finally got a chance to cover a question that I got quite a few times, which is how did I handle the drop that we saw in February going into March since I typically sell? And the one disclaimer I want to share before I get into the details here is this was a really, really unique scenario. Most bear markets last around 299 days on average. So this one just capitulated so quickly that it made it very, very easy to adjust and get out unscathed, essentially. So it's just important for me to give that disclaimer because most bear markets turn to be a little bit nastier than what I've seen here and, based on my experience. So I like to share that just because I don't want to give people false pretense on how this typically plays out because this isn't it. This was a very unique scenario. So, that part aside, let me get my dumb face out of the way and let's take a look at the screen. So, first off, I just wanted to share kind of the time frame that I was trading and what it looks like. So, this is where I kind of started collecting the positions that I was adjusting. And then this is where I got out at a full profit. So, what I want to take a note of before I start getting into all the details is I am not walking through my entire portfolio. I am simply picking a trade that I had in the portfolio and walking through my adjustments to that. Most of the trades in my portfolio followed suit. So I'm just want to get that up front just because it's a ton of data to collect the entire portfolio, but this is essentially the approach I took in most of the positions. So let's take a look at the starting positions. On the 13th of January, I had 10 of the 21 Feb 162 puts and the 163 puts at 146 and 169 respectively. Now, a quick note with the market at pretty much all-time highs, I always make sure I am as little invested as I possibly can be. And what I mean by that is I want to make sure that I leave room in case the market decides to come down a bit. When I see the market at all time highs, I see more risk to the downside. So that's why I start to scale in my trades a little bit to leave some room. So, what I want to talk through is this 163 put. So, the following discussion pertains to the 163 put. The 162 is not included in this, and I manage that one exactly the same as this one. I'm just tracking the 163 because it's a little easier to follow one than both. So, on 3 Feb, I ended up taking in the 163s and I paid $2.77. And then for context, the prefab is right around in here. So it's kind of early, right when we started seeing some of the down move. And I sold to open 10 of the 6 March 161 puts at 281. So we collected a credit here, moved my strike down $2, kind of standard adjustments here, nothing crazy. Then on the 25th of February, this is where the drop started to intensify a little bit. And I have a chart at the, yeah, don't worry about the text. I know it's overlaid, but this is where I started kind of realizing that the drop is accelerating. And I wanted to start making some pretty aggressive adjustments. So what I ended up doing is taking in those 161s and I sold 18 of the 20 March 153s at $3.15. So the reason why I did that is I really wanted to get a move on my basis. So I took my basis essentially from 163 to 161, now to 153. And I collected a net credit on all of these. This is kind of the math that corresponds to it. Let me get this out of the way so you can see. And I essentially walked away with $1,900 up on all of the trades and one open position, which is this 18 153 puts. Now, as you can tell, started to scale into the position. As we start moving further off of highs, I'm comfortable expanding into a position. That's why I leave room in the trade to do this exact thing. So, next up, we have on 6 March and I just carried over the previous position up here for context. But on 6 March, I took in those 153 puts and I paid $12.04. Again, for context, March um, March 6th was in here. So when the market was really right before another gap down, but about halfway through this move. And I laid out 31 of the 24 April 138 puts, and I received $7.30. So to close the 18 153s, I paid 22,320, and then I collected 22,630. So as I'm scaling into the trade, still collecting net credits on these adjustments. Then on the 23rd of March, I sold to open 50 of the 1 May 92 puts at $5.35. This is a standalone trade. As you can see, this isn't a roll that's attached to these 138 puts. This is really more of a basis management tool. I love when IWM is under $100. So this got sent out in case I got hung up here for whatever reason. I wanted to be able to take assignment at a lower value and reduce my cost basis on the underlying if I'm holding shares. So that's what this trade is. Then on the 30th of March, I took in those 138 puts. I paid 24.60 and I laid out 75 of the 15 May 117 puts collecting $10.43. So just continuing that scaling in, reducing basis and collecting credits. The overall position right now, including all of the rolls to date, is up 30,925, and that has 2 open positions, the 92 puts and 117. So again, this isn't money to walk away with. It is tied to these 2 open trades. Then to kind of wrap us up here, on the 20th of April, I took in those 92 puts at 15 cents, so just collecting profit on that trade I laid out. And I sold 20 of the 29 May 111 puts 515. So I maintained the exposure to that lower basis, again, on purpose. However, this is when I started thinking that, this rebound is fake. So I started scaling down. Notice how I took my risk from 50 contracts down to 20 in case I needed to start adding more to these positions. Then on the 29th of April, I bought to close those 117 puts at 36 cents. Now, the one thing to note about that trade in and of itself is at 36 cents, if I'm tracking just the 117s, that would have been a very small loss on that trade, something between $200-300 with all of those adjustments. Didn't sweat it at all. I wanted to get out of that trade because a lot of capital was tied up in it. And that small loss was easily offset by this 92 put trade that I took off at a really decent profit. So on the 4th of May, I sold to open 20 of the 12 June 117 puts at $4.40. So right now, both of these trades are non-rolled trades. This is new exposure. All the rolled positions are cleared off the table, and we're kind of starting fresh. Now, on 11 May, I bought to close both positions. The 111s came down for 33 cents. The 117s came down for $1.74. So as a quick recap, this really was the series of trades that I made. So in total, with this trade, I walked away with $36,495. It was a total of 16 trades, so that's in and out. I went from 22% invested at the beginning around T1, and then at the height, which was down here between T6 and T7, I was 3.4 times levered. Now, I was expecting to get around 6.2 times levered, just never got there because the market started to return very quickly. And essentially, we were able to adjust this position through a 40% drop and walk away with a decent profit. It's nothing to write home about, but the point is the ability to manage through that sort of drop is what this is all about. This is why I trade the way I do. And this is why I make sure I leave room to scale into positions as the market falls. This is why when we're near all-time highs, I like to collect as little as I can to meet my monthly objectives and then leave the rest of the risk off the table to again allow for this kind of expansion. Now, another note that I think is worth mentioning is notice how I didn't take assignment. And one of the reasons why I do not like to take assignment during these heavy drops is because I want the capital to use my margin somewhere else. As soon as I start buying a bunch of shares of stock, what ends up happening is that uses a ton of cash and it limits my flexibility. Whereas if I keep the position in options and just adjusting those options trades, it allows me to continue to adjust my basis, adjust my size, and not really get hung up at a specific basis. Now, I had a target if I was below $100 on basis, I would take assignment there and just hold those positions because I like IWM below 100. But we were very, temporarily there, and then we kind of moved away pretty quickly, so it just never happened. So this is how I managed the drop. Like I said, this is walking through one position. However, I think it's, pretty explicit for how I went through most of the portfolio. So hope it helps. If anybody's any questions or any ads on how they manage the drop, would love to hear about it. All right, catch everybody later.